Okay, I will discuss the difference of absorption costing and variable costing. So let's start. These are simply costing methods. Okay, that's one. Absorption costing. Okay, absorption costing is also known as full costing or gap costing because it follows the generally accepted accounting principle, no? Especially the concept on matching. While variable costing is also known as your direct costing, and this is not used for financial statement reporting. Okay, most of the time this is just used for decision making. So what are the main differences of absorption costing and variable costing? First, let's focus on the types of cost. Basically, you have manufacturing and non-manufacturing for gap cost. Let's start with your manufacturing cost. Okay, basically you have your direct materials. Okay, so you have here your direct materials. Okay, ayan, kunyari magkatabi tayo at dinidiscuss ko lang to sa tabi mo. Ayan, adding. Okay, so you have direct materials. The other manufacturing costs, you have your direct labor. So we are just reviewing, no? Oh, what else? You also have your manufacturing overhead. Let's divide that into two. You have here your variable manufacturing overhead, and you have here your fixed manufacturing overhead. Okay, so these are your basic manufacturing costs. Ayan. And we also have your non-manufacturing, yung common expenses natin. Let's divide them according to their behavior pa rin. So you have here your variable selling, and administrative expenses or costs. And then you have here your fixed selling and administrative costs. Okay, so these are our basic costs. Let's try to use a different color. Let's try to use something bright. Ayan, yellow. Ito. Ayan. So what are the differences of absorption costing and variable costing? Actually, parehong-pareho lang to eh. The main difference lies on the treatment of your fixed manufacturing overhead. Okay? When we talk about absorption costing, all your manufacturing costs, your direct materials, okay, your direct materials, direct labor, variable manufacturing overhead, and fixed manufacturing overhead, they are treated as product cost. Ayan. And product costs, well, na-discuss na natin to, no? Product costs are cost of the product. Every time we incur them, ibig sabihin, every time we incur these costs, direct materials, direct labor, and manufacturing overhead, okay, they will be attributed to the cost of our product. Okay, so habang tumataas to, tumataas din yung expected cost ng product natin. Okay, and they will be inventoriable. Okay, so they will become part of our assets as part of inventories, and once these inventories are sold, that's the time they will become expenses. Okay, so yun. While your variable selling and administrative cost naman, your variable and fixed, okay, they will be treated as period costs. And when we say, ayan, pangit ng sulat. And when we say period costs, they are expense, no, in the period when they are incurred. Okay, so that's your absorption costing. Okay, now for variable costing, there is a slight change, no, because your product cost, okay, will only be composed of, it will only be composed of, ayan, your direct materials, direct labor, and variable manufacturing overhead. While your period cost, will be composed of your fixed manufacturing overhead, your variable and fixed selling and administrative costs. So, nandito po yung main difference ng absorption costing and variable costing. Take note, no? If this one is treated as a product cost, okay, some parts of that may be deferred. If they are, they are in the inventories, no? They will only be realized once the inventories are sold, okay? Here in variable costing method, all of your fixed manufacturing overhead will be expense. Yun pala dapat yung term not realized. They will be expense in the period when they are incurred. Okay, now because of that, okay, what will now be the effect? We expect that there will be a significant change, okay, in the unit cost of the product, okay? There will also be a difference in the cost of your inventories. Syempre, inventories. Aside from that, there will be a difference in the net income. Ayun. Which will be the considered to be the common questions, no, in this topic. Variable versus absorption costing. Okay po? So, ayan. Anyway, let's continue. Let's have an example. Assuming we have this problem, no, wherein you have this company who annually, not annually, so every year, okay, they produce 25,000 units, and you have the following cost, okay? Now, in this case, the cost for your direct materials, direct labor, and variable manufacturing overhead was already totaled. Parang lasira, ano? Total summed up into 10. Ayan. Your variable selling and admin is 3. So, these are your variable cost. And these are your fixed cost. No? This is your fixed manufacturing overhead. And this will be the fixed selling and administrative expense. So, again, let's try to review. Okay, anong tututukan natin dito? We will be focusing on the treatment on the fixed manufacturing overhead because under variable costing, this will be treated as a period cost, while for absorption costing, this will be treated as a product cost. Okay, so what are the common questions here? Okay, well, let's start with the first one. What will be the expected unit cost, okay, if we are using the absorption costing? Under absorption costing, the product cost will be composed of, balikan natin, the product cost will be composed of direct materials, direct labor, and variable manufacturing overhead together with the fixed manufacturing overhead. So let's try to go through this table. Okay, so how much is our direct materials, direct labor, and variable manufacturing overhead? Okay, this one is 10. And under variable costing, this is also part of your unit cost, no, or your product cost. So that is also 10. Now, please feel free to pause the video or rewind, screen capture, take some notes, no, so you can follow. Ayan. Or you can just pause the video so that you will have a few minutes, no, a few seconds to absorb and internalize what we are discussing. Okay, and once you are ready, you can just press continue. Okay. Now, also under absorption costing, the fixed manufacturing overhead is part of the unit cost. So let's try to compute based on our problem. If I remember it right, okay, your fixed manufacturing overhead is 150,000. And this company produced 25,000 units. They produce 25,000 units every year. So 150 divided by 25, let me get my calculator. So you have 150 divided by 25, you will get 6. Okay, so let's go back dito. Okay, so you will now have 6. Ayan. Doon po nanggaling yung unit cost under absorption costing, and it is 16. Okay? While under variable costing, the fixed manufacturing overhead will be treated as an expense. So, hindi po siya kasama sa unit cost. This will be blank lang yan or 0. Therefore, the unit cost under variable costing will be 10 per unit. Okay po. So, sir, what about the selling and administrative expenses? Take note, they are treated as a period expense. Therefore, they are not considered in the computation of unit cost. Okay. So, let's continue. Now, let's have some additional information. What if this company, okay, were able to sell, okay, 20,000 units during the year at a price of 30 each. And there were no units in the beginning inventory. So if there are no units in the beginning inventory, as if this is year 1, di ba? So let's call this year 1. In year 1, they were able to produce, okay, the production is 25,000 units while their sales, okay, sales is, kano na yun? So, you have 20,000 units. So, in your ending inventory, if your beginning inventory is 0, we expect that your ending inventory will be 5,000 units. Okay po? Or if there is a beginning inventory, we expect that this inventory will increase by 5,000 units. Ayan. So, let's continue. Okay, let's compute for the net income naman. What will be the net income under absorption costing and under variable costing? Okay, let's start with the absorption costing muna. Okay, sige, let's write absorption costing net income. So, where do we start in the computation of your net income? Syempre, we start with our sales, okay? And since we were able to sell 20,000 units, if you go back to the previous slide, okay, and we will be selling this at 30, so 20,000 units times 30, that will be 600,000. Tama? 2 times 3 is 6. 1, 2, 3, 4, 5. Okay, and then sales, you now have your cost of goods sold. Less cost of goods sold. Okay, so how do we compute this? Okay, since there is no beginning inventory, okay, and the units sold for this year came from this year's production, we can safely compute, no? We can safely compute for the cost of goods sold as 20,000 times 16. Tama po ba? So you have 16. 20 times 16. 16 times 2 is 32. 1, 2, 3, 4. So 32, 1, 2, 3, 4. So you have 320,000 pesos. Ay, dollars nga pala, no? So, sige, mag-dollars muna tayo dito. Ayun. So, 600 minus 320, that will be 380. No, 280. So, that will be 280. And this is now our gross profit. Gross profit. Sir, ano po yung profit? Ayan. So, alam na ninyo yan. And then, from your gross profit, we deduct our selling and administrative expenses. So how much will be our selling and administrative expenses? There are two components. You have the variable and your fixed. So let's start with the variable. Since we sold 20,000, okay, so you have 20,000 units. Tada, times 3. Tama ba? Wait lang. Oh yes, tama, times 3. So times 3, that's going to be 60,000. And then your fixed is 100. Just go back to our previous slide. So 60 plus 100, that will be 160. So 280 minus 160, it will be 120,000 pesos or dollars. Yan. Bakit naka-pesos pa rin ito? Yan, sabi kong dollars na siya eh. S as in Siegfried. Okay, so that's now your net income. O yan, binagalan ko na. Sana ay nasundan nyo. So this is the net operating income under absorption costing for year 1. Let's try to compute for your variable costing naman. Okay? So under variable costing, okay, so under variable costing, we use the contribution margin approach. Okay, so under contribution margin approach, the net income will be computed by, syempre, starting with your sales. But this time, sige, palitan natin yung kulay. Because I will be discussing the details, no, in your CVP analysis. Okay, so ayan. Under contribution margin approach, ilalagay natin yan. Or contribution margin method, also known as behavioral method. Behavioral. Yan. So you have your behavioral method, wherein costs will be classified according to their behavior. So let's go back to yellow. I'll show you later. So how do you compute for your sales? It was previously computed at 600,000 pesos. Dollars. $600,000. And then under behavioral approach or contribution margin approach, you deduct your variable expenses, no? Variable costs. And what are our variable costs? We have two kinds of variable cost. You have the variable product cost, and then you have the variable selling and administrative expenses. Okay, so you have the, anong gusto nyo ko? Long cut or shortcut. Kunyari, may sumagot na shortcut, ilolong cut natin muna. Ayan, so you have the, for the product, okay, for the product which is purely variable, you have 10, okay, times 20,000 units. So 10 times 20,000 units sold, that will be 200. And then you have the period cost, no? Your variable selling and, can I just say, S&A, selling and administrative expenses. Okay po, which is 3 per unit times 20,000. So you now have 60,000. Okay po, so this will now be 200. Ayan, 260. Okay, or if you want to have a shortcut, or you just add this one and you will get 13 times 20,000, and that's now your total variable cost, which is 260. Ta-da! And the difference of these two will be 340. Oops. Ayan. Ayan, 340,000, which is known as your contribution margin. Okay, so what is your contribution margin? Sir, this is the difference of your sales and variable cost. Yes, that's how you compute for the contribution margin. Your contribution margin is the amount, well, that is left after deducting the variable cost, is the amount that you're going to use to recover your fixed costs, and any amount, no, left, okay, will now go to your net income. This is actually the first line of defense. As long as your contribution margin is positive, there's a chance that you will have a net income. Okay, especially if you're already operating above. If you're operating above the break-even point, sigurado, okay, that you will have a net income. But that's a different lesson. Anyway, less fixed cost. What are our fixed costs? Oh, long cut na lang tayo, long cut. You have your manufacturing overhead, sir. What about manufacturing overhead? Bakit siya nakasama dyan? Sulat ko muna. Sabi natin, under variable costing, your manufacturing overhead will be expensed in the period when they are incurred. Okay, ibig sabihin, okay, they will be deducted 100% against our revenues. Okay, so what is our fixed manufacturing overhead? You have 150. And you also have your selling and administrative expense fixed at 100. Okay, so you now have 250 pesos. 240 minus 250. Ewan ko ba't hindi na kaya ng utak ko. 340. Low-bat na. Minus 250. 90. Ayun. So we have 90,000 pesos. Or dollars. Okay, $90,000. This is now our net. Ayun. That is our net income using the variable costing. Now, if you notice, this is lower than our our absorption costing net income. Our absorption costing net income, okay, under absorption costing, it is 120,000. There is a difference of 30,000. Oh, bakit kaya mas mataas yung absorption costing net income by 30,000? If you go back to the main difference, in absorption versus variable costing, the main difference is in the treatment of manufacturing overhead. Under absorption costing, when we produced 25,000 units, when we produced 25,000 units, we incurred $150,000 of fixed overhead, and this 150 is allocated to your 25,000, which means there is 150 divided by 25. You now have $6 per unit. Okay, that's the fixed overhead per unit. And this 25, if you divide this into how much was sold, which is 20,000, and how much was left in the inventory, which is 5,000, and multiply that by the fixed cost per unit, which is 6. It was previously computed. 20 times 6, this one will be 120,000 pesos. While this one is, magkano po? 30,000 pesos. For a total of 150,000 pesos. Okay. So why am I computing this? Number one, we'd like to reconcile, how come this is higher absorption costing? How much this is higher by 30,000? If you try to understand, out of this $150,000, how much of this was expensed during the period using absorption costing? It's only 120. While under variable costing, the entire 150 was deducted against the revenue. Okay, what happened with the 30,000? This one is left in the inventory. It was deferred. Okay, it's not yet released. So, under absorption costing, if they recognized a lower expense, we expect that the net income will be higher. By how much? By the difference, which is 30,000 pesos. This one has a lower income because the expense, the manufacturing overhead, is higher by 30,000 pesos naman. Okay? This one is an example, of, if you've been reading your books, diba? Of this expression. Let me write it down. Ayan. If production is greater than sales, we expect that the net income under absorption costing is higher, or absorption costing net income is higher than the variable costing net income. Ayan, tatandaan ninyo to. Kahit ito lang, P and A. If P is higher than S, A is higher than V. Okay, so that's how the net income of this costing method behaves, no, in relation to production and sales. The explanation for this has something to do with the expense. Okay, why is absorption costing net income higher when the production is higher? Okay, is higher than sales. It's because the fixed manufacturing overhead is less, no, as compared to the fixed manufacturing overhead under variable costing. So let me put S. Masyado na maliit. Okay, let me put S on that side. The fixed manufacturing overhead under absorption costing. Dapat pala absorption, hindi S. Okay, pwede ba burahin pa to? Ayan. So letter A. The fixed manufacturing overhead under absorption costing is less than the fixed manufacturing overhead under variable costing. And the difference of these two will be found in the ending inventory. Ending balance of our inventory. Okay po? So, that's for year 1. Now, let's have another example. Okay? What if, wait lang. Before we go there, let's try to reconcile pala. How do you reconcile this? Because there are a lot of problems in your textbook that requires you to reconcile the net income between absorption costing and variable costing. Now, there are different ways on how you can reconcile. Okay? I always start, no? I like to always start with the absorption costing. Yan, net income. I will explain why. Okay, mamaya. Pero you have here the absorption costing net income. And then from your absorption costing net income, you add, no? You add from the beginning balance of your inventory. Oops, bakit letter C yan? The beginning balance of your inventory in terms of your fixed cost. Yan, so the fixed cost or fixed manufacturing overhead, sulat natin, fixed manufacturing overhead found in your beginning inventory. And then from there, you deduct, okay, the ending balance of your inventory in terms of the fixed cost or fixed manufacturing overhead. And you will be left with the variable. Yan. Variable costing. Yeah, variable costing net income. This one is, yes, this one always works. Parang Rexon na yan, no? It won't let you down. And it's so easy to memorize kasi alphabetically arranged na siya. A, B, E, V. Okay, so reconciliation of net income, ABEV. What is ABEV? Absorption costing net income plus beginning balance of inventory in terms of fixed manufacturing overhead less the ending balance in terms of fixed manufacturing overhead, and you'll be left with the variable costing net income. Okay, so ganyan po siya palagi. Especially if the problem is a little constructive, marami pong application ito. But anyway, let's try to apply this, no? From your absorption costing net income, we have 90,000. Okay, since we don't have any beginning inventory, we only have the ending inventory. How much is our ending inventory? In terms of units, we have 5,000 units. Okay, and the fixed cost per unit is 6. So 5 times 6 is 30. Wait lang. Napagbaliktad ko yata. Ayan. Under absorption costing, hindi pala siya 90. This one is, pahiya na naman ako. This one is 120,000. So 120 minus 30, you will get 90,000. Maganda nga sana kapag may year 2 din siya, tapos magkaiba rin yung cost, magagamit mo to. Like, for example, in your beginning, you have 6 units, and last year, the fixed cost per unit is 5. So, 6,000 times 5, parang ganun. So, it's easier to reconcile if you follow this approach. Okay po? So, that's how you reconcile. Okay. Next, let's have another example. What if we have the same problem, but this time, the sales is 30,000 units. Okay. So, in the earlier problem, in year 1, let me write it down. In year 1, you were able to produce 25,000 units, and you were able to sell 20,000 units. So, your ending balance is 5,000 because you don't have any beginning inventories. Let's have another example, no? Wherein you have a production of 25,000, but this time your sales is 30,000 pesos. O, ayan. So, anong mangyayari? Is this possible? The answer is yes. Why? Because take note, we still have the beginning balance. So, that's the ending balance. Yes, it's the ending balance for year 1, but it's the beginning balance for year 2. Which means we can sell this in year 2. So, 5 plus 25, you now have 30,000. So, the ending balance for year 2 will be 0. Okay po, nabenta po siya lahat. Okay, so what are the common questions? Everything is the same, no? The unit cost, variable and fixed, okay, even the selling price. Ayan. So, common question number 1, how much is the cost per unit under absorption costing and variable costing? O, di pagtabihin natin. Absorption costing and variable costing. O. Yan, isipin mo na lang na magkatabi tayo ngayon. O, eto ading, ano ang laman ng absorption costing mo? You have your direct labor, you have the direct materials, and you have the variable manufacturing overhead. And the total of these 3 is 10. Which is also part of the unit cost under variable costing. Also, as part of your unit cost, okay, you have the fixed manufacturing overhead, okay, which is, i-base natin dito, diba? Our fix is 150,000 pesos, dollars pala, divided by how many units was produced, 25, same with last year. Since the production is the same with last year, we expect that the fixed cost per unit will still be the same as last year, which is 6. So, our unit cost now will be 16, while for variable costing will still be at 10. So, we can now conclude that as long as the number of units produced is the same, the unit cost for last year and this year under absorption costing is the same. What about for variable costing? It will not be affected by the production. That's the advantage. Whether you produce more or less, okay, the unit cost will still be at 10 because it will not be affected by the fixed manufacturing overhead. Tama po? Okay, kahit magbago yung fixed cost natin or magbago yung production natin, this one will still be 10. Okay, so let's try to compute for the absorption costing net income. Absorption costing net income. So let's start with your sales. Okay, so how much will be our sales? We were able to sell 30,000 units. Tama ba? Is that my example? Yes. So for year 2, we were able to sell 30,000 units at a selling price of 30. So 30 times 30, that will be 900. So that's 900,000 pesos. And then less your cost of goods sold. Okay, since the unit cost last year is the same as the unit cost this year, it's now safe to compute it this way. 30,000 times 16. Okay? Bakit ganon? Your unit cost last year is 16. Right? Pertaining to that, 5,000. And then the 25,000 produced this year is also 16. Or do you simply add 5,000 plus that 25? So you now have 30. Ayan natin yan. Times 16. Patay. Ito yata medyo kailangan ko ng calculator. Sa inyong calculator natin, you have 30 kyaw or 30,000 times. Wala, inaantok na ako. It's now 480. Okay, so 480. Now 900 minus 480, that will be 420. That's your gross profit. Okay, from your gross profit, we deduct our expenses, your selling and administrative expenses, and we have two. You have the variable selling and administrative expense, and then you have your fixed selling and administrative expense. So magkano po ulit ito? You were able to sell 30,000. You multiply this by 3, so you now have 90, and this one is fixed. Okay, at 190 plus 100,000, you will now have 190,000 pesos. So 420 minus 190, 420 minus 190 equals 230. So you now have $230,000 pala. Kamuntik na naman ako dun. Okay, as your net income under absorption costing. There you go. That's your net income under absorption costing. Diyan na. Okay. Now, let's compute for the variable costing net income naman. Okay, kunyari, sinasabayan mo ako. Pwede mo rin akong unahan. Variable costing. Paano na? We start with your sales. Okay, they have the same sales. Pero sige na nga, I'm going to write it down. 30,000 times 30 per unit. So, your sales... Nope, it's not pesos. Okay, your sales is now 900,000 pesos. Less your variable cost. Okay, so what are our variable cost? You have the unit cost of 10, and then you have the selling and administrative expense of 3. So that's 13. Okay, so we multiply that by 30,000 units. So 30,000 units times 13. 1, 2, 3, 9. 390. There you go. So 900 minus 390. This will be 510. That's your first line of defense, and it's called your contribution margin. Okay, the amount that you're going to use to recover your fixed cost. Kano po ba yung fixed cost natin? Shortcut na natin. You have this 150 coming from your manufacturing overhead. Take note of that, no? Plus your 100 fixed selling and administrative expenses. Tama ba? Ayun. 250. Kaya ito ngayon ay magiging 260. Okay, so this is now our net income. Okay, so that's your net income under variable costing. Okay, so let's try to compare. This one under absorption is 230 and the variable costing is 260. Let's try to reconcile that. Okay, let's use a different color. Paano na po ulit yung reconciliation? Above. Okay, plus and minus. You have your absorption costing net income, which is previously 230. Okay. Do we have a beginning inventory? Yes. Your beginning inventory in terms of fixed cost, that will be 5,000 times 6 per unit. So this one will be 30,000. Next, do we have ending inventory? It's 0 units, no? So, wala na po yan. And you will now have your variable costing net income, which is 260,000. O, diba? Kahit pala hindi mo alam ito, if you know how to reconcile, you can compute for 260. Now, this is an example. No, this one is an example of this expression. Let me write it down. When production is less than your sales, diba? We just produced 25,000 but we were able to sell 30,000 units. So what will happen? O, laging magkasama yung A. A at P. P, A. So if P is less, A is also less. What is A? That's your absorption costing net income. It will be less compared to your variable costing net income. Why? We expect, no, that the fixed manufacturing overhead under absorption costing will be more than the fixed manufacturing overhead under variable costing. Bakit ganun? Let's try to analyze this, no? If you try to look at the variable costing method, last year the expense on the fixed manufacturing overhead is 150. This year is also 150. And this year is also 150. But for absorption costing, dito tayo, under absorption costing, how much is our fixed expense? This year, no, let's talk about your production muna. This year, you produced 25,000 units, and for that 25,000, you incurred 150,000 units. Aside from that, you were also able to sell 3,000 units coming from last year. And the fixed overhead related to that 3,000 units is 30,000, which was computed earlier. Therefore, the total amount that was deducted against our revenue is 180,000 pesos. To check if that is true, okay, let's analyze your fixed cost per unit. Out of the 16, di ba, 6 pesos or 6 units? $6 pala. $6 per unit is the fixed cost, no? Is your fixed cost per unit. Times, how many units was sold? 30. This is 180. So, for year 2, we deducted 180 under absorption costing, but for variable costing, we only deducted 150. Let's write that down. Under absorption costing, you deducted 180, that's 150 plus 30. And for variable costing, we deducted 150 only. Okay, so, ayun. Now, if you try to summarize that for year 1, okay, for year 1, may writing as burahin natin. For year 1 and year 2, under absorption costing, the net income is 120. But under variable costing, the net income is 90. But for year 2, the variable costing net income is 260. Siya naman yung mas mataas. While for absorption costing, it's 230. Now, if you try to look at the total, and if you try to look at the total, 120 plus 230, this is 350. And this one is also 350. So the net income is the same, nagkaroon lang ng timing difference. Another way to analyze this is by looking at your sales, no? Your sales and your production. Okay, your sales for year 1 is 20,000 coming from a production of 25,000. While for year 2, you were able to sell 30,000 even if your production is only 25,000. How did that happen? Because you have 5,000 coming from year 1. Now, if you try to put that together, you will get 50,000 as your sales, and this one is also 50,000. Okay? So when your production is equal to sales, we also expect per year, or especially in total, pag cumulative, when production is equal to sales, your net income under absorption costing will also be equal under variable costing. Okay? So, ayun. Now, what if, no? Let's have a summary. What if instead, no? Instead of ganito kasi yan eh. In our first example, let's call this example 1. In our first example, year 1, you have year 1 and year 2. Your production for year 1 is 25,000, and in year 2 it's also 25,000. But your sales for year 1 is 20,000, and your sales for year 2 is 30,000. So we have a constant production and you have a varying sale, no? Varying yung sales natin. Let's have another example. What if, let's call this example number 2. Okay, let's have year 1 and year 2. What if you have the following information? Let's say that your production is 30,000 and you were able to sell 25,000. And then for year 2, your production is 20,000 and your sales is 25. The total is still the same, no? 50-50. It's just that in our first example, this one is constant. But in our second example, your sales is constant. Now, what I'd like you to do is, okay, you pause this video, you use the information, the same information, okay? Ang nagbago lang is the production and your sales. And then you compute, okay, for what are the common questions ulit? You have your unit cost. Compute for the unit cost between variable costing and absorption costing for year 1 and year 2. And then you compute for the net income under absorption costing and variable costing for year 1 and year 2. Okay, sige. I-pause nyo na muna yan. Naman, kunyari, pinost nyo na. Yan. Alam ko naman na marami sa inyo ang hindi magko-compute. Pero kunyari, nag-compute kayo. Yan, let's try to compare our results using example number 2. Okay. Year 1, let's compute for your unit costs. Alright. So you have here your absorption costing and you have the variable costing. What are the components of our unit costs? You have the direct labor, direct materials, the variable manufacturing overhead, and then you have the fixed overhead per unit. Okay, this one is 10, this one is also 10. Okay po. Now, under absorption costing, medyo mag-iiba yan. Because your fixed manufacturing overhead is still 150, but for year 1, you produced 30,000 units. Balikan natin, baka nagkamali ako. For year 1, your production is 30,000 units. So we are going to divide this by 30,000 units. So 150 divide that by 30, that will be 5. Okay. Ayan. Pwede, no? So you now have your unit cost. What is now our unit cost under absorption? So you have 10 plus 5. That will now be 15 per unit, and under variable costing, you will now have 10 per unit. That will be for year 1. Okay, so still on year 1, let's try to compute further net income. Starting with, ano ba yung una natin? Absorption ba palagi? So, you have absorption. You have your absorption costing. Net income. Ngayon, pag nagkamali ako, ayaw ko na pong mag-edit. Okay, idaan na lang natin sa comments kung may questions po kayo. Promise, no? Ano bang tawag mo doon? I will not be offended. Oh, yan. Basta magtanong lang kayo, lalo na kapag medyo may mali yatang sinabi si sir, may hindi ako maintindihan. Anyway, let's continue. So, we start with your sales. You were able to sell 25,000 units. You multiply that by 30. So, 25,000 times 30, that's 75. No, 750 pala. Okay, tama ba? $750,000. Okay. And then, what about your cost of goods sold? Cost of goods sold. So, again, this is year 1. Under the assumption that there is no beginning inventory. Okay, so madali na lang yung cost of goods sold natin. It's 25,000 times 15. Okay, ito hindi kaya ng utak ko. Ayan, labas ang calculator. 25,000 to 3 times 15 per unit coming from 10 plus 5. So you have 375,000. Okay, kunyari nag-enjoy pa ako, 750 less 375, that's also 375,000. Ayan, sana hindi pa kayo inaantok. This is known as your gross margin. Okay, from your gross margin, you deduct your expenses. Okay, you have the fixed and variable selling and administrative expenses. Let's start with the variable. Okay, I think it's still 3 times 25,000 units produced. This one will be 75. And your fixed overhead will be 175. No, 100 lang pala. Ayan, so 75 plus 100, you now have 175,000 pesos. So 375 minus 175, this is now wala na, pagod na ako, nag-isip pa ako. Ayan, $200. This is now your net income. Net income. Okay, screenshot. And then we go to variable costing. Variable costing, net income. Take note, we're still in year 1. So, paano po yon? Sales. Di ba dapat pareho na lang yung sales? 25,000 times 30. So, this one will be 750,000 less your variable cost, okay, which is 10 plus 3. 13 times 25,000. So 13 times, mag-calculator na, 13 times 25,000 equals 325,000. Ayun, 750 minus 325, that will be 400,000 125. Okay. Ano ito? This is your contribution margin. You will use that to recover your fixed cost. In this case, it's 150 plus 100. So you now have 2. And 200. 5425 minus 250. This is 1. Yan. 175. That's now your net income. Screenshot. Okay, let's continue. Let's try to reconcile above. Binibilisan ko dahil gutom na po ako. Plus and minus. Okay, so you have your absorption costing net income. You have the variable costing net income. You have the beginning balance and ending balance of your inventory in terms of your what? Fixed overhead per unit or fixed cost per unit. Okay na rin yun. Okay, so let's do this. For year 1, the absorption costing net income, yung na-compute natin kanina ay 200. Dapat ang lumabas dito ay 175. Since there's no beginning inventory, we only have the ending. Okay, we produced 30. Nagbenta ng 25. So you have 5,000 times, what's the fixed cost per unit? Our fixed cost per unit is, na-compute ko na to kanina, 5. Ayun. There you go. So, 5 times 5, you have 25,000. And we are almost done for year 1. This is $175,000 as your variable costing net income. This one is for year 1. Screenshot. Okay, let's go to your unit cost. Year 2. What is our unit cost? Wala na, pangit na ng sulat. Under absorption costing and variable costing, you still have the direct materials, dirty man, dirty lady, and the variable manufacturing overhead. So you have 10 and you have 10. Tapos, you have the fixed overhead per unit. Okay, so for year 2, ano ba to? You have 150,000 pa rin. Constant naman yan. But for year 2, they only produce 20,000. So, 15 divided by 2, 7.5. That's now your fixed cost per unit. So you now have your unit cost of 17.5 and you will have 10. Yan. Screenshot. Okay, let's compute for your absorption costing. Year 2 na tayo. Absorption costing net income. Starting with your sales. This time your sales will be constant because we're selling 25,000 every year. No? So it's 25,000 times times 30. So you will have times 3, 750. 750,000. Less your cost of goods sold. Dito, medyo tricky. Kasi out of this 25,000, 20,000 came from this year and 5,000 came from last year. And they don't have the same unit cost, no? So, kailangan nating hatiin yan. 20,000 and 5,000. This year, the cost is 17.5 while last year, the cost is 15. Magkaiba sila ng fixed cost. Okay? I suggest before you continue, no, pag di mo naintindihan tong part na to, you pause the video and then you go back to your notes. Or you just rewind the video, and then you come back to this section. Anyway, so you have 20,000 times 17.5. Magkano po yun? 20,000 times 17.5. Ang saya-saya naman ito. You have 350. And 5 times 15. 5 times 15 is 75. Yes, it's 75. So 350 plus 75, that will be 425. Ayan. That's now your cost of goods sold. A common error that I see, okay, this one is nasanay sila sa shortcut, no? Ang ginagawa nila is 25, or ginagawa nyo 25,000 times 1750. You cannot do that. This is only for the 20,000 that you produced for this period. For the 5,000 sold, okay, the unit cost is 15. Okay po, so let's try to cross that out. Baka ma-memorize nyo pa siya. Okay, so mali po yan. Errorita. Okay. Okay, so let's continue. Anong kulay na ba ako? Ang ganda naman pala ng blue. Sana blue na lang. Okay, 750 minus 425. That will be 25, 4, 3. This is now your gross profit or gross margin. Okay, and then less our expenses. Malapit na. Selling and administrative expense. You have here your variable, and then you have here your fixed. Okay, your variable is 3 times 25,000. Parang na-compute ko na to kanina. So you have 75,000, and the fixed is 100. Tada! 75 plus 100 is 175,325 minus 175 is 150. Ayan, 150,000 net income. Okay, under absorption costing method. Hindi pa pala tayo tapos. Okay, let's compute for your variable costing. Ayan, this one is for year 2. Ayan, variable costing naman. Variable costing net income. Ang saya-saya naman ito. Kunyari, nag-e-enjoy ako. Magkano ba yung nabenta natin ng second year? It's 25,000 pa rin. Times sold for 30, that will be 75,000 pesos. Okay. So, yan. Less your variable cost, which is 10, the variable product cost, plus 3, the variable selling and administrative cost. So, that's 13 times 25,000. Parang na-compute ko na to kanina. Wala na, pagod na. Pagod na ang lola nyo. Ito ay 753.25. I-check na lang natin dahil mahirap na namang magkamali. Feeling ko tama yan. Ulit. So you have 13 times unit sold 25. Yes. Okay, so you now have 325. 750 minus 325. Ito ay 25. 73. That will be 4. Okay, this is now your contribution margin. Margin. Are you a margin? Less your fixed cost, which is 150,000 plus 100. Ano yung 150? That's your fixed manufacturing overhead. 100, that's your fixed selling and administrative expense. So you now have 250. 425 minus 250, that's 1. 75. Dapat pareho lang sila eh. Dapat pareho lang sila for year 1. Balikan natin. For year 1, it's 175. Yes, and for year 2, it's also 175. Bakit ganon? Okay, anyway, let's try to reconcile muna. Year 2 reconciliation. Above. Okay, so you have your absorption costing, net income, variable costing, net income, beginning balance and ending balance of inventory. As to the fixed cost per unit, nagkakaintindihan na tayo dito. Pero sige na nga. Sulat ko pa rin. Ayan. Your variable, absorption costing net income was 150. 150. Ayan, 150. No beginning inventory. Hindi. Meron tayong beginning inventory. Pero wala tayong ending inventory because this is already year 2. So, for your beginning inventory, it's 5,000. And the fixed cost attached to this is 5. So, that will be 25. 150 plus 25, that's 1. Okay, 175,000. Bakit ganun? Let's try to summarize nga muna. Ayan, for year 1 and year 2. For year 1 and year 2, your absorption costing net income is 200, and then for year 2, it's 150. This one, under variable costing, year 1 is 175, that's the net income, and this one is also 175. Now, if you try to look at the changes, syempre yung total niyan, it's the same, di ba? You try to look at the total of your production and your sales. Your production for year 1 is 30,000, year 2 is 20,000, but your sales is constant at 25,000. So, bakit ganun? Bakit siya pa bago-bago? From 200, it went to 150, but your sales is the same, 25,000. Now, take note, in year 1, your production is greater than sales, while in year 2, your production is less than sales. This is one of the weakness of absorption costing. Okay, why? If you try to look at this, okay, we can conclude that the net income under absorption costing is not just affected by the level of your sales, but it's also affected by changes in your production. Bakit ganun? If you remember your fixed cost, the fixed cost, your fixed cost is constant in total. That's your total fixed cost. But, okay, per unit, ayan, it is decreasing at a decreasing rate. So, this one is your fixed cost per unit. Yun yung nangyari dito. The more units that you produce, okay, production greater than sales. Okay, if you try to compare this 20 versus 30, more units produced, you will have lower unit cost. If you try to review the unit cost for this one under absorption costing is how much? 15. While here, you only produce 20. Konti lang yung mag-absorb kung saan mai-allocate yung 150,000. That's why the unit cost under absorption costing is 17.5. Okay, let me repeat that. Ayan. 17.5. Why is this considered as a weakness? Imagine, if you want to increase your income, what do you do? Okay, you simply produce more. And the more units you produce, you will have lower unit cost. Even if your sales is constant, okay, your net income will be increasing. Okay, it might lead to sub-optimization. Or, ano ba? It may lead to wrong decisions, no? It may appear that you are more profitable when in fact that's dangerous. Naiipon lang pala yung expenses natin. Where? In your inventories. Okay, your expenses, specifically your fixed manufacturing overhead, no, were deferred in your inventories. Okay, so tataas nga yung net income mo but your inventories will pile up hanggang sa hindi mo na maibenta yung pinoproduce mo. Okay, so ayun, what are the things that you have to remember? Let's review what are the common questions here. Okay, your common questions will be based on the difference in the unit cost, okay, also in the net income. Sir, what about the difference in the inventory? Well, makikita mo yan sa unit cost. Sir, what about the difference in the inventory per in terms of units? So, makikita mo yan sa difference ng or changes between production and your sales. Diyan lang naman iikot yan eh. If you can understand, no, the difference, where the difference in the unit cost came from or where the difference in the net income came from, wala ka ng problema sa topic na ito. Okay? So, ayun, saan ba nanggagaling yan? Lahat yan is rooted, no, in the treatment in your fixed manufacturing overhead. Okay, because this one is treated as a product cost under absorption costing net income, ay absorption costing method. Ayan, while in your variable costing, this one is treated as a period cost, okay, under variable costing. Okay, and some things that you have to remember, you know, basic patterns. If you see that your production is greater than sales, o automatic, ano yung kasama ng P? It's A. We expect that the absorption costing net income will be higher than your variable costing net income. Okay, why? Magbabaliktad na yan. Because the fixed overhead expense under absorption costing is less than the fixed overhead expense under variable costing method. Okay, also, okay, the difference will be found in your inventories. If your production is greater than sales, you will also expect that your beginning balance in your inventory in terms of quantity will be less than the ending balance, okay, in your inventory. So the difference, no, the difference of the expense, no, will be found in your inventory. Why is there a difference, or why is there a change in your inventory? Because of the difference in your production and in your sales. Okay, ulitin natin. Okay, this is where it started. Because there is a difference in the production and sales, there will be a change in your ending inventories. Okay po? Ayan. And the difference in the expense, no, fixed overhead will be found in your inventories. That's why there is a difference in your net income. And ganun lang, baliktarin lang natin. If production is less than sales, ano yung kasama ng production palagi? Laging magkasabay si A. We expect that absorption costing net income will be less than our variable costing net income. Okay po? The difference will be found in the treatment of fixed manufacturing overhead. Okay? Because your fixed overhead under absorption costing will be more than the fixed overhead deducted against our revenues using the variable costing method. Okay. And if production is less than sales, we expect that the beginning inventory in quantity will be greater or your inventories will decrease. Kailangan intindihin niyo to, because sometimes your production and sales will not be given. Instead, sasabihin lang ng problem, your inventories increased by, had a net increased by 1,000 units. So, parang ganun. Okay. Now, in instances wherein your production is equal to sales, we expect that absorption costing net income will be equal to your variable costing net income. And the fixed overhead charged against the revenues under absorption costing will be the same with the fixed overhead not charged using the variable costing. Okay. And if production is equal to your sales, there will be no change in the inventories. So your beginning and ending balance in your inventories will be the same. Okay, so ayun. Now, if you're asking, sir, what are we going to use? Well, it depends. Now, if you are going to prepare financial statements, you're going to use, you have no choice, you're going to use your absorption costing method. Because this one is prescribed by generally accepted accounting principles. But for decision making and analysis, nakita naman natin yung weakness ng absorption costing. Okay? Yan, nakita naman natin yung weakness ng absorption costing. Mas maganda pag decision making, you use the variable costing method. Okay. Now, actually, okay lang naman if you use absorption costing, it will just create a timing difference. Nakita nyo kanina? Nadi-delay lang. Pag nag-equal na yung cumulative sales and yung cumulative production mo, eventually your cumulative net income will be the same. Okay po? So, ayun. Now, one of the things that makes variable costing naman far more superior, superior pa than absorption costing is that the net income under variable costing is parallel. It's parallel or it moves together with your sales. So under variable costing, if your sales will increase, you expect that your net income will also increase. If sales is constant, your net income will also be constant. Ganun po sa variable costing. And it's not affected, it's not affected by the changes in your production. Not like absorption costing, okay, which is affected by the level of sales and at the same time affected by the level of production. So it's now harder for us to determine where the increase in the net income came from. Did it come from the increase in our sales or baka mas marami lang tayong na produce? Okay po. So again, ano pa yung mga kailangan yung matandaan kaya? Yes, also for variable costing, this one is consistent with our cost volume profit analysis, which will be our next topic. Okay, so I'll try to come up with a material on CVP. Now, there are more advantages and disadvantages of these two items. Basahin nyo na lang po yung textbook niyo. And if you have any questions, please don't hesitate to ask them in the comment section below, or if you have any negative reactions siguro or baka may corrections, ayun, please feel free to put your comments. Okay po? So, thank you.